Hello, Maverick traders. This is Rob Reinhold, and it is August 1st. Boy, this is kind of sad. This is the last month of summer before it goes away and we go into fall. But lots of stuff happening in the market. Let's get into it. In this session, we're going to be going over the news of the day. We're going to take a look at commodities. We have gold at an all-time high after today's market action. We're going to take a look at the internals. We're going to take a look at the sectors. And then, of course, I've got some bullish setups for you. I've got one bearish setup for you. Let's jump into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's take a look at today's final numbers. We started off the day with what was good news. We had good news overnight. We had Meta come out with really good earnings, and the stock was up very, very nicely. There are a few other stocks had good earnings, and the market started out pretty good. In the morning, we did get some bad economic numbers. We got the jobless claims were actually up to the highest level they've been in over a year. Okay, not that big of a deal. And then we got the PMI report that came out, and that really took the legs out from under the market. And then we just free-falled. We went into total free-fall. We saw the bond yields absolutely plummet. We are under 4% on the 10-year bond. That's huge. We have not seen under 4% in a long time. Gold surged to a new all-time high. So we got a big risk-off move. People panicking and flying for safe assets. If we take a look at what the numbers were, they were definitely off their lows. So if we take a look at the equity markets, Dow at one point was down 1.8%, and it rallied by the end of the day to close at 1.2%. S&P was down 2%, closed at 1.4%. The Qs were down over 3%. They closed off their lows. The Russell was down 4% at one point, closed off its lows. Now look, these are crummy numbers. It was an ugly day, and especially with the big up day we had yesterday. But we're going to take a look at the charts and see if we can make any sense out of it. The gold, that's supposed to be up 0.58%, oil down a little bit. The advanced decline line was ugly. 4 out of every 5 stocks basically went lower, well, 3 out of every 4. But we still have a good amount of stocks above the 50-day moving average. And we'll take a look at the sectors here. Same thing. We have one area of the market that's getting absolutely crushed, and the rest of the market is doing okay. Now, I'm going to spend some time here on this chart because I'm going to go through what I've been talking about the last week or so. I've been talking about how these are not good candles for a bounce. Long upper shadows are not good candles for a bounce. And that's why I said in last week's trading room, I see a little bit more downside for the market. And then I said I think the Fed might be the catalyst to turn this market around. And look at this. We got a big move higher with the jump. And on our currency room last night, I actually said, hey, I think that is a good candle for a tradable bottom. I didn't say we were going back up to new all-time highs, but I said, look, that's a good tradable bottom. Today's candle completely eliminates that in every way, shape, and form. And I am sitting here looking at this chart, and I have to admit, I have no idea. I have no idea. Now, I get on here every week and a couple times during the week and tell everyone, hey, this is what I think is going to happen. There are times during the year where I have to come and say, hey, look, I don't know what's going to happen. I think I could flip a coin and probably do as good as my opinion, which I realize then why give your opinion? Why not just flip a coin? So that's where I am right now. The S&P, definitely very mixed. The Qs, there's no question about the Qs. I mean, this was classic bear rally material. Back up to a moving average, hit its head on the moving average. This is a terrible chart pattern. So for me, I'm looking at this saying, okay, well, technology is going to keep going down, but the broader market, what is it going to do? And that leads me into what we've been talking about for the last 2 weeks. There's a rotation going on in this market. The great rotation, where we had a very narrow market for the 6 months of the year, where the NASDAQ 100 and the MAG 7, they were getting all the capital. Now they are getting hammered. But look at this. Look at this chart here. Utilities having a great week. Real estate, which was our favorite sector, we had 3 plus 3 sectors. Real estate was one of them. Healthcare was the other one. Check that out. Healthcare up for the week. So if you're in healthcare long, it doesn't feel like such a nasty, brutal week. We also talked about financials. Was our other plus 3? Okay, it's flat. It had a nasty day today. Definitely had a nasty day today. But for the week, it's okay. The 3 sectors we talked about, comms services, have been sliding. We said avoid those or be short those. Okay, most of that is meta. But we talked about being short in consumer cyclicals, and we talked about being short in technology. If you've been following the sectors, you've been doing okay. Look, I'm not saying you're killing it, but what I'm saying is you're not getting hammered. Any of you who are just piling in the MAG 7 thinking that, hey, I can just trade NVIDIAs and I can just trade Teslas and whatever and only go long, you're getting killed. You're getting killed. We have to look at the market. We have to look at the inside of the market. And when we're going long, we have to go long where the market says to go long and short where the market says to go short. Right now, the overall S&P is at a 0. It's at a 0. Yesterday, we were up at the 20-day moving average. Today, we're down at the 50-day moving average. Until we clear out and make a definitive move one way or the other, I am just going to stay at 0. I'm just going to stay at 0 overall. Say, hey, look, I'm going to go long the strong sectors, short the weak sectors. I'm going to have as many longs as I'm going to have shorts. I'll have some sideways, and that's how I'm going to trade this market. I want to go through some trade setups, and I just want to show you, all I did was say, okay, give me the real estate sector. All 4 of these look fantastic. Okay, give me the best performers in the healthcare sector. All 4 of these look fantastic. Okay, give me the best stocks in the financial sector. Here you go. All of these are looking like solid trades. And so the first one I want to talk about in the healthcare sector is Teva Pharmaceuticals. So we've got this nice long high base forming, and check it out. It is looking, wants to break out. Yesterday, it tried to break out, fell back down. Today's candle, gap down. There was more buyers and sellers by the end of the day. I don't know when this thing breaks out. I don't even know if it breaks out. But what I do know is that when stocks do things like this, they tend to break out to the upside. With the market being so shaky, I'm being very, very cautious on my targets on the upside. So this one, 18. 18 is the highest I'm going. So this is just 17, 18 bull call spread. It's right in the center. So 50-50, 1-to-1 will be the statistical odds on this. Next up, going into the real estate sector, this is Prologis. I actually like the stock IRT better on a chart, but it doesn't have the options that I wanted. So I went down to Prologis. And this is the same thing. We had a pullback. We had a nice bottom. We've now broken out of this resistance. Okay, maybe we don't have a clear breakout, but it's definitely showing us that if it's not this time, maybe it backs down a day or two later, turns into more of an ascending triangle, breaks out. 130 is the target. So this has $5 strikes, 125, 130. It's right in the middle, just like the other one. So this is going to be, okay, there's, $2.40 to gain. It's going to cost you $2.60. You're basically 50-50. These are the trades that I'm looking to make on the long side. With the market not being clear on where it's going, I have no idea where it's going. So I'm going to do mild bulls on the strong sectors, mild bears on the weak sectors, and I'm going to just have this capital out there until I get a real clear call on where the market is going to be trending. On the short side, I've been waiting for this one for a while. This is TripAdvisor, and it has been basing and basing and basing. I've had a couple trades over the months of just non-directional stuff where I just wanted it to stay weak. You can see here, we got a clear breakdown here. After the bell, we got Booking.com announced some disappointing earnings, a competitor. That's going to put some more pressure on this. Look how long this base is. When things base for this long, the breakdowns typically have a lot of energy behind them, going down to $16. So a 16.17 bear call spread, you're going to get, again, if you do a bear call spread, you'll get like a 65-70 cent credit. So you have 30 cents of risk. Or if you do a bear put spread, it's the same thing. You'll pay 30 cents and get 70 cents of upside. It's the same risk reward on either side. All right, let's talk about tomorrow. We did get some more negative earnings after the close. Now, it is about 35 minutes after the close. I wanted to wait until we got Amazon. We got Amazon right after the bell, and Amazon was down slightly. So here we have Amazon. This is the most recent quote here. So Amazon is trading down 6% after hours. So we have Amazon, big deal, trading down. The next one that came out was Intel. Intel, a big chip company. As you can see, it is getting absolutely creamed, down 17%. So two tech names getting hit. But then we had Apple come out. And look, I actually haven't seen this because Apple just came out with earnings like 7 minutes ago while I've been doing this. But I've had the futures up. And the futures have popped off the bottom a little bit. So that tells me that Apple is probably trading up a little bit. I have to put in the ticker symbol right. That would help. Okay, here we are. Apple trading up 1%. Okay. This is where we are after hours. The Apple news is probably enough to keep us from a really nasty open tomorrow. But we do have one thing that's going to happen between now and tomorrow morning is we have the jobs report tomorrow morning. The July payroll report comes out at 8:30 a.m. Eastern Time. The futures will absolutely move off of this number. If it's really weak, watch out below. This could be another wipeout day because now we're getting slowing economy. And I've been talking about this over the past couple of weeks, how the economy is slowing and right now is good news. And I've been showing you that meter, that happy meter, and saying, oh, the market's in a good mood. It's brushing off this slowing economy news because it's happy it's going to get a rate cut. I said at some point, the bad news becomes bad news. And there's no way to predict it. The market just wakes up one day and decides, oh, this slowing economy is bad news. That's happened. So now, bad news is bad news. If we get a payrolls report that is weaker than expected, it is bad news. We now are at the point where bad news is bad news. Don't try to think it's going to be just like it was a month ago because the market sentiment is totally different. If this number comes out above expectations, okay, it saves the market. And that's all it does. I can't put a bow on this market and say, hey, if we get a good payrolls report, the market's going to take off to the upside. All it does is saves it for the time being. And if it can be saved long enough, maybe we might make a bottom. And maybe in a week or two, we might have a decent upward market. That is the best I can say is going to happen on the upside. On the flip side, we could have another 5% down, 10% down. With the bad report and with more bad earnings, we could definitely have more downside on the line. So I do think we have some asymmetric risk here. I think you want to be very cautious on being overly long here. Very cautious because I think the odds, not the odds, but the asymmetric risk. If everything is good news, I think you get a relief. I think you get a market that stops going down and goes up a couple percent. If things go wrong, then I think you got a market that's in free fall, just like it's been in. I think it definitely pays here to be cautious on the long side. Check out the earnings, mostly energy and materials from this point on. Pretty much the second quarter earnings are done at this point. We have a few stragglers, but that is about it. That is a market roundup. I will be sharing more of my thoughts with you tomorrow in the trading room over the weekend, where I do a much better breakdown of all the markets, all the sectors, and give you lots more trade ideas. All right, take care. Goodbye, everyone.